Standard Chartered and CNBC TV 18 presents India on the Move, the 21st Century Agenda, Season 3.
Hello everybody, we are back with the third edition of India on the Move. This series seems to have struck the right chord with our targeted audience, and based on their feedback, we are revisiting some of the topics of Season 2. But we are looking at those topics from a new angle. Besides, we also added some new topics this season. To reiterate, India on the Move is a thought leadership series conceptualized by CNBC TV 18 in partnership with Standard Chartered. The underlying objective of this series is to bring together industry leaders and experts on a single platform to discuss mega trends that impact businesses, as also share ideas and insights that can rapidly transform India. Today, our focus is on wealth management, one of the fastest growing segments in the financial sector. And the topic is changing needs of high net worth individuals, or HNIs. To throw more light on the subject, I have with me in the studio three experts. Ashish Garg, Partner and Director, the Boston Consulting Group, India. Mr. Kailash Kulkarni, CEO of L&T Investment Management. And Mr. Nitin Singh, Managing Director and Head, Wealth Management, Standard Chartered. Gentlemen, welcome to the show. So the question to all the panelists here. The number of HNIs and the accumulated wealth is expected to almost double by 2022. So my question is, where is the growth going to come from? Will it be driven by new Uber-class, rich-driven startup promoters or people from small towns? Nitin, starting with you.
So I think a very valid question, and I think especially if you look at most of the studies that are happening globally, India is a market where you're seeing the fastest growth of both HNIs as well as ultra HNI customers coming. I think the best part of it is that it is not driven just by one segment. You're seeing growth happen across people either who are working in corporates, right? People who have their own startups and actually really monetizing those stakes. Okay. People from small towns, as you're seeing increase internet penetration, you're seeing old businesses reinvesting again, and promoters over there making money. So it is across the entire class, right? So I think that is one of the best things that we've seen within the fact that this entire growth is being broad-based.
Karl, you want to add to that?
I want to substantiate what Nitin says, but the most interesting part is that there's a huge amount of wealth in category 2 and category 3 towns in India, which has traditionally been investing in real estate and gold. I think these are the kind of people today who want to explore other opportunities and are looking at other financial savings instruments, whether it is just plain vanilla mutual funds or something different. And these are the people who are really trying to now come about because there is a lot of wealth. So apart from entrepreneurs who are now selling their stakes or really have made it big in the last 5-10 years, the wealth is there. But we are seeing a whole lot of very large old money also, which has been there in smaller towns and cities, which is really coming into the financial savings
So
space.
you think the old money and the no rich both are into the play right now?
Yes, absolutely.
Ashish, quickly you want to...
Look, I think India is a very exciting market for wealth management because India has actually only 40% of wealth that is coming from either which is earned, self-earned, or which is coming from entrepreneurs. That number actually is high 50s in other parts of the world or in even other emerging markets like China. So as this number starts to change, you will find the amount of money that is being managed, which professionals or entrepreneurs are putting into the market, will just kind of propel this growth.
But Nitin, you talked about the profile of the HNIs. Are the requirements of all the HNI, are they same or are all customized to each of them? How do you all go about it? What are the requirements of these HNI if they are sports personalities or film stars or they could be startup entrepreneurs?
I think one of the basic needs for all of them is the fact that wealth management is not their forte, right? They're experts in their own fields, be it a film star or be it a sports or somebody in business. They're really looking for professional people to be able to offer them advice in terms of really what to do with their money. Your point on the fact that people have differing needs is very true. So I think one of the pieces that an advisor or a wealth management firm really needs to do is have different strokes for different folks. The needs remain common in terms of the fact that how do we really grow our wealth? What do we do to meet the various goals that we have? Be it in terms of either putting away nest eggs for children, be it in terms of education, be it in terms of investments overseas, or be it in terms of really looking at succession planning or looking at what to do within their businesses. So for different people, you actually have to practice a few of those basic tenets. But I think the fact that they want a professional setup advising them, a professional setup to be able to advise them on the various options that exist today is a need that I think is common across all of them.
So basically, what you're saying is they are cash rich but time poor, and they're looking for somebody to protect their wealth, grow their wealth, and then pass it to the next generation. That's the role of wealth managers.
Yes. I think you've put it very well.
Okay. Kailash, you want to add to that?
Just to add to that, one of the things which possibly was not done in the past was philanthropy. A large part of these HNI segments today want to create trusts, want to do, apart from leaving behind for the next generation, they're also wanting to leave behind for the society. Some people want to just focus on ensuring that education at the Grameen level is taken at a much more professional way. And all the money, in fact, some of them are giving hundreds of crores to the segment just to ensure that the primary education in schools across the villages in the country gets uplifted. So wealth management in the true definition earlier would have been primarily investing. Today it's gone beyond investing, and a large number of HNIs today are asking people like Nitin and his team questions not just on investing, but also formation of trust, leaving behind a legacy, and what can we do in terms of philanthropy also. So it's a very all-encompassing kind of
So one is you
situation.
create wealth and also social responsibility.
Absolutely.
That's happening.
Absolutely.
Standard Chartered and CNBC TV 18 presents India on the Move, the 21st Century Agenda, Season 3.
Ashish, here I wanted to bring what McKinsey has said. It talked about impact investment. It's saying impact investment worth $4.5 billion fetch an IRR of 11% between 2010 and 2016 in India. Given this what kind of growth do you envisage in this space? And what are the HNI's requirements generally? Are they open to this CSR and all those things?
So I think when you talk about impact investment, I think it's also about putting your money where your beliefs are, where you want to contribute to the society. And actually, some of them are very rewarding. So it's just not about CSR. It's not about giving money for which you don't have any expectation of return. So, for example, the entire angel investment that is going around, a large part of it is, of course, into pure commercial enterprises. But many of the investments that are being done through these kind of networks are also into purposes, into objectives with startups which are serving at the grassroots level. There is a lot of activity which is going on in NGOs and networks which are supporting that. I think expecting a return of about 10% is fair enough. People are willing to wait for long periods of time. Also, many times people are willing to spend time in these kind of networks, because often you will find they need some capacity, they need some support to be able to do well. So I think this trend is going to continue.
What is the flavor of the season now? One side is the impact investing. Traditionally, people invested in, say, real estate, gold, bonds. So what is the flavor of the season, and what are the products HNI is shunning now?
I think one of the pieces that has happened is that you've seen real estate and gold really take a secular dip. If you just look at the RBI data itself over the course of the last 3 or 4 years, you've actually seen both real estate and gold continue to dip year on year. Now today you're looking at only about 9% being in physical assets, right? Your financial assets continue to be at about 35% in terms of what you're holding, right? I think another piece that has taken a little bit of a hit over the last 6 months, but I think that's more temporary, is really investment into debt for HNIs, because HNIs have tended to see a lot of volatility come through a lot of the stuff that has happened. But I think going forward, the fact that customers are investing money into financial instruments, the fact that people continue to want to have exposure to vehicles that give them a combination of both capital gains and interest income continue to be there. A very interesting area that I think is going to gain prominence is something like REITs. Right, okay. where you're really talking about real estate investment trusts. You've just seen the first REIT happen recently. It was actually oversubscribed about 3 or 4 times. Retail investors still didn't pick that up. The regulators also making a lot of move towards making stuff like REITs and InvITs popular, and I think that is a story that is actually going to evolve over the course of the next few years.
So Nitin, HNI also looking at new avenues. So one such thing which I saw was the offshore investment. I think the HNIs are showing include to invest in offshore, and this number has gone up from, say, $1.5 billion to $12 billion. So how are you designing product to cater to the needs, actually?
So I think Very valid question because most HNIs come to us saying that what can we do offshore, etc. So I think really what we are permitted to do today is to really refer customers offshore and ask them to open offshore banking accounts. And I think that's a forte that an international bank like Standard Chartered has, given our presence across the globe. What then ends up happening is that our relationship managers based in those countries end up then offering ideas to customers basis what they're allowed to do. So, for example, customers want to invest in Apple, they want to invest in Tesla, they want to invest in a lot of these companies.
Tesla,
right?
Apple, that can be done.
Yeah. We have some great online equity platforms sitting in Singapore, sitting in Dubai, sitting in London, etc., which you can really access to be able to buy securities anywhere that we want across the globe. So, rather than designing products onshore, which is something that we are not regulatorily allowed to do, but we do help them facilitate and transfer whatever limits that they're allowed to do on an annual basis. I think the other piece that is becoming more and more prevalent is buying of property overseas. Okay. So especially the ultra HNIs, where children are moving offshore to study, etc. They want to buy stuff in London, Dubai, Singapore are the most common destinations, but now it's actually expanding beyond that as well. So therefore, access to being able to really park money offshore and be able to buy it and do it over a period of time is again a very key need that a lot of these HNIs ask for.
Standard Chartered and CNBC TV 18 presents India on the Move, the 21st Century Agenda, Season 3.
So is the technology in play here? I was told in China they use AI, they use machine learning, they use advanced analytics to customize product, and give individual service. Is that happening in India? Tech plus touch.
Yeah. I think, Ravi, there is no institution, no service provider can survive if they don't digitize their business models. And I think in India also, most of the wealth managers, most of the service providers are moving in the direction. People are obviously at different stages of the evolution curve. But I think you raise a very interesting point. I think the learning for the world is coming from China on tech innovation, on wealth innovation. Some of the largest fintechs, if you may, are China-based. In fact, the whole discussion that is happening around TikTok, right? Is about in one day's time, the AI algorithms are able to really understand you and customize the offering that they give to their consumers. I think that part is missing in India. So how do you collect data? We collect data only which is probably on paper. We kind of digitize that. KYC kind of customer data is collected. But can we get some more data which is unstructured from social media, for example? How do we put the learning algorithms in place? You mentioned about AI. How do we then start to analyze those results and test those results out? I would say, for example, Lufan, is one of the is really one of the leading proponents of this in the world. Will have thousands and thousands of products and customized for almost every segment. You can have segments as small as 30 people in a large country, even with 20 million consumers. So I think the brain behind that tech and how do you customize the solutions, I think is a journey that we have to take. I think the second point is, as you invest in tech, you are able to further reduce the cost to serve. So you really don't need the high cost to serve the wealth customers, and that will mean
that... Help your bottom line also?
Yeah, it helps our bottom line because the cost-income ratios are still on the higher side. So can you reduce the cost? Can you serve... If, let's say, today, the wealth customers, the starting point threshold is, let's say, 5 crore rupees, a million.
Okay.
Can you bring that to 1 crore rupees? Now, so I think the tech will really offer a lot of solutions in terms of customization, in broadening the funnel, and also, I think, just making sure that they are talking to... they are doing the touch points at the right time.
Nitin, looking at the Indians are very good in adapting. Standard Chartered did a survey some time back on the Asian country. I think you interviewed some 11,000 people. What did this survey exactly throw up?
So we did a survey on the emerging affluent base actually across Africa, Middle East and Asia. And it really talked about the fact that we are seeing a significant amount of increase in social mobility happen within our emerging affluent base, especially given their previous generation. The social mobility today within our emerging affluent base is increasing because of better education, because of better job prospects, because people are moving. And one of the biggest pieces that came out of that is that most people said that wealth management and being able to address their wealth needs is critical to them to being socially mobile in terms of really wanting to aspire and go further up. So one of the biggest needs that was identified across this emerging affluent base, and this is no longer HNI, this is talking about the emerging affluent people who are just making some money now to start investing and putting away. They said their greatest need is for ensuring that they're able to get the right array of wealth management products, and they have a right professional advisor who can really help them make that journey. And it's very interesting. We saw that in a very big way in India. 70% of people, in fact, India was the market where we saw this emerge the highest. 70% of people from a social mobility perspective, and a very large amount of women within that.
Okay.
Talking about, in fact, India has seen the highest growth rate of women really who are becoming more and more socially mobile.
Social mobile, sir. The women also getting into the HNIs rule nowadays.
Yes, of course. I mean, if you look at it, we've got a series of women entrepreneurs, women who are in very large corporate positions.
Women also taking over family business.
Women are also taking over family businesses, and I think they're also asking more and more for their wealth management needs to be met. Right, they are, and you would not really want to generalize it normally, but normally women are much more long-term, holistic investors. They are really looking at that, and they want those specific needs to be met. So there's a lot of work that actually we have to do within this underserved class, really in terms of ensuring that both from a product and a portfolio and an advisory perspective, you're able to offer that to them.
Okay, we're running out of time actually, so I'll come to the last question actually, starting with you, Ashish. So how do you see the future of wealth management industry in India? What is needed to strengthen that industry in terms of infrastructure, in terms of government inputs, or what does the industry need to do? Because India is going to become a $5 trillion economy by 2022.
So look, I think the prospects for India are very, very bright. I think there's an evolution happening on both the sides. I think, for example, while we spoke about advisory models, those advisory models mean that the RMs and the way RMs interact with their customers will need to undergo a change. So there's a change management effort required there. Technology investment needs to happen. I think the entire information that has to go to the customers and how customers can participate in this market is starting to mobilize more and more customers. So I think we are on a good track. I think some of the customers, for example, which are being served by public sector banks are probably being unserved. Can those customers be brought onto some of the wealth management platforms will unlock a whole set of new customer class into wealth management.
Kailash, you?
I think the government, the Ministry of Finance, the various regulators who, multiple regulators, because India has 4 main regulators to manage this whole space, they're all working towards becoming a very single cohesive unit. Okay. Today, for example, there could be different rules across different regulators, and one of the things that the government is on its way to do is kind of streamline this. And as and when in the next 1-2 years you see a lot of these things getting streamlined, you'll see this explosion happen in terms of the number of customers and ease of servicing these customers. Today you have to look at inter-regulator depending on the kind of product you offer, because certain things may be allowed in place A but not necessarily in place B. And I think ironing out those small creases is something the government is fully focused on. And we believe that this will only help propel this industry in a significant manner as the years are going to come by.
Okay, Nitin, final word to you.
Yeah, so I think India is in a very interesting position. You've got a demographic story that's happening at both ends. You've got the emerging affluent base rising at one of the fastest globally. True. And on the other hand, you also have the ultra high net worth and high net worth pace, where India is one of the fastest growing markets. So I think from a demographic perspective, we've got it completely right. I think the piece really about being able to sustain this growth is if all 3 players within this piece, which is basically professional wealth advisors like us, which is asset managers like Kailash, or be it the regulators, really come together to sustain this momentum. I think there's a lot of innovation that's happening, right? We are really catching pace very, very quickly, but be it in terms of the professional advice that we provide and ensure that there are no mishaps, be it in terms of the asset managers really looking at what they're investing in, what are the next growth stories, how do we really give the right type of advice to customers, and don't create situations where customers lose faith within that, right? Or be it the regulators in terms of streamlining processes as well as looking at corporate governance, right? If we are able to get these 3 pieces right, I really believe we are still scratching the edge of what we have. I think we can easily quadruple even in terms of penetration of financial assets and, more importantly, wealth management within the industry in India.
Okay, from what all the 3 of you are saying, one word that comes to my mind is it's a very exciting time for the wealth management industry.
Absolutely.
Okay, gentlemen, thanks a lot for being on the show. It was a pleasure talking to each one of you.
Thank you so much.
Thank you very much.
Standard Chartered and CNBC TV 18 presents India on the Move, the 21st Century Agenda, Season 3. Focus, ideate, innovate, enable.